Peter Lynch once said that the real money isn't made when you buy a stock, it's made while you wait. That sounds almost too simple in a world where people check stock prices every hour and expect overnight success. But what if the biggest advantage an investor can have isn't superior intelligence or perfect timing? What if it's simply the patience to let time do what panic never can? Peter Lynch managed one of the greatest mutual funds in history, yet his strategy wasn't built on chasing the hottest stocks or predicting tomorrow's headlines. It was built on finding strong businesses, understanding what made them valuable, and then giving them enough time to grow. He knew that while markets move every day, great companies build value over years. Think about planting a fruit tree. You wouldn't dig it up every week to see if the roots were growing. You water it, protect it, and trust the process. Investing works much the same way, yet many people buy a stock on Monday, expect dramatic gains by Friday, and sell the moment prices fall. Ironically, the very impatience meant to protect their money often becomes the reason they lose it. Human psychology makes patience difficult. We're wired to react. A falling market feels dangerous, while a rising one creates fear of missing out. News headlines amplify every small movement until it feels like action is the only sensible response. Peter Lynch understood that successful investing often means doing the exact opposite. Sometimes the smartest decision is to do nothing at all. History repeatedly rewards patient investors. Companies with strong products, capable leadership, and sustainable earnings often experience temporary setbacks. During those moments, impatient investors leave, while patient investors quietly stay the course. As the business continues to grow, time gradually reveals its true value. This doesn't mean blindly holding every investment forever. Peter Lynch wasn't advocating stubbornness. If the reasons for buying a company disappear, declining fundamentals, poor management, or a broken business model, then it's wise to reassess. Patience isn't ignoring reality. It's refusing to let short-term emotions override long-term logic. One practical lesson from Peter Lynch is to spend more time researching before you invest, so you can spend less time worrying after you invest. Confidence comes from understanding what you own, not from watching the market every minute. When you know why you invested, temporary price swings become far less intimidating. Perhaps the greatest lesson Peter Lynch teaches isn't really about stocks at all. It's about character. Wealth is often built quietly, through discipline, consistency, and the willingness to let compounding work without interruption. In a world obsessed with speed, patience has become a rare advantage, and that may be exactly why it remains one of the most powerful investing strategies ever discovered.